Hello everyone. Welcome back to Forex Signals TV. I'm Shain Vernier, market analyst over at forexsignals.com. For the past several weeks, I've been bombarded with one premier question. How do I get started and succeed in the markets? That is the trillion-dollar question. You don't need a great broker. You don't need great strategy. Above all else, you need structure. Now, I've read 1,000 of these trading books, as have you. You've probably watched a ton of YouTube videos as well. Structure. How do you give structure to your trading? You plan each and every session to the T. In my view, there's 3 phases to every trading session. There's your pre-market preparation, there's your live trade, and then there's your post-market evaluation. Without those 3 phases, you don't have the structure you need to succeed in the markets. All right, let's get back over to the trading lab. Let's dig into each one of these phases and see how you can integrate them into your daily routine. One of the most frequent questions I get asked literally every day by new traders is, how do I get started in the market? What do I need to do to get going in the right direction? Do I need strategy? Do I need a great broker? What do I need to do? And the first thing I tell them is begin by designing your trading day. Understand what it's going to take for you to succeed over the long haul each and every single day. I boiled it down to 3 basic phases that your trading day needs to have. Number 1, you have to have some pre-market preparation. If you're not ready, you're doomed to fail. Number 2, you need to be able to execute in a consistent fashion. That means focus, that means concentration. And number 3, you're going to need to do some sort of post-market evaluation. You have to know what you did and how you performed to be able to improve that performance over the long haul. Let's look at the first phase of active trading. It's pre-market prep. The bottom line is this: if you're not early, you're late. And that's true in all things in life. If you think that you can trade the Wall Street Open and show up at, I don't know, 9:29 in the morning and know everything that you need to know before the market starts, you're sadly mistaken and you're going to lose money. Remember, you've got to be able to know what's going to happen to the degree that we can know before we ever get started trading. So how would I approach that? Well, the first thing I would do is look at my economic calendar. Second thing I would do is look for breaking news items, see if today is going to be a crazy day, if the session's going to be wild due to some external event. And number 3, I would lay my technical levels out. Now, I'm a hybrid trader. That's what I do. I look for news events. I look for key economic reports that are going to drive market participation. And then I fall back on my technicals to trade the action. It's very simple. The biggest thing you need to do, though, is you need to know when the market is likely to be active. What does that mean? Planned economic events on our economic calendar. We can easily find that. It takes us 2 seconds to find an economic calendar online. No excuse for not knowing what's scheduled for that day. Number 2, just a quick scan around the news. We're not talking about trying to find truth. We're trying to figure out what's going on. What is the landscape right now? Again, very easy to find. Pick your news source of choice. See what the headlines say. Will this drive the market? And then lastly, our technical levels. For me, I'm a big Fibonacci trader. I'll have my Fibonacci's up, my long-term anchor points, my short-term anchor points, and I'll go to work. I am ready when the bell rings or whenever I decide to start my trading session. I am ready to trade, and that's what pre-market preparation is all about. The second facet, the second phase is active trade. And when we're looking at active trade, what does that mean? It means this is when we buy and we sell our assets. This is exactly when we are going to be getting in and out of the markets. We have to execute with precision. Our goal is flawless execution here. We want no mistakes. We want to be able to buy and want to be able to sell with precision and do exactly what we want to do from an execution standpoint. To do that, you're going to need to be focused. There can't be any distractions around you. You need to zone in and know exactly what you're doing. Talked to a trader the other day. He was distracted by the phone ringing, made a mistake, cost him money. You don't want to be a part of those mistakes. I call those unforced errors. When we are executing during the active trade phase of our day, whether it's 2 hours or 20 hours, we need to be focused and dialed in. Lastly, I love number 4 right here. Active trade is anything you want it to be. It can be anything that you want it to be. What does that mean? It means that you could trade 20 hours or 2 hours. For me, my trading day, my focus, my focal point is between 7 a.m. Mountain Time and 9:30 a.m. Mountain Time. That is when I'm scalping WTI crude oil on shorter time frames. I'm also looking at my longer term anchor points for Forex pairs, but that is the time of day when I need to be absolutely dialed in and focused. If I can't do that, then I need to tailor a time when I can be. And if you're a Forex trader, a lot of folks trade 24 hours a day. That's great. But when you actually execute that trade, you need to be dialed in and completely focused. Post-market evaluation, you have to put the trading day to bed. If you don't put the trading day to bed properly, you're liable to let some of the emotional strain of the previous session spill into the following session. We can't have that. That means we could either compound errors or we could find ourselves in a compromised emotional state with euphoria. We're euphoric over how we did the day before, and we think we're going to show up and it's going to be exactly the same. Categorically false. Proper evaluation is hugely important from a psychological standpoint. You have to gain closure on the previous session before you move on to the next session. How do you do that? Well, number one, you look at your P&L for the day. That's obvious. Pretty much all of us do that intuitively anyways. Number two, we look at exactly the trades we executed. Within those executions, we look at our strengths and our weaknesses. What did we do well? What did we do poorly? And we try to really focus on what we did poorly to improve that for the coming sessions. And then biggest thing we have to do, I personally adapt something called the 4 o'clock rule, 4 p.m. rule. And that is when the day is over, it's over. Once my post-market evaluation's done, whether it's at 4, 5, 6, or 7 in the evening, I move on to the next day. Now, that's going to vary according to what kind of trader you are, but you have to figure out a way to quantify your performance and move forward in a positive light. That's what building the trader's mindset is all about. So what's the whole point? What's the point of these 3 phases? Consistency. If you're going to be in the market for any period of time, you are going to have to establish consistency. How can we do that? We get ready to trade. Victory loves preparation. We show up ready to go each and every day. Then we execute. We execute with maximum precision. We're looking for flawless execution. We are shooting for perfection here. Can you be perfect? No, you can't be perfect. But if you aspire to be perfect, you have an opportunity to be good. And that's what we want to be. We want to be good over time. That's consistency. That's what we need to get done. That needs to be our goal. And lastly, our post-market evaluation develops the mental toughness. It contributes to that positive trader's mindset where, hey, maybe I wasn't so good today, but today is over. I'm looking towards tomorrow with a little bit of passion and ready to go. So think about that. Those 3 phases can set you up to be consistent for the long haul. And that's the key to being a player in this market for any length of time. The key point of this entire video, structure over strategy. I don't care how good your strategy is. If you don't have the structure in place to execute it flawlessly or at least as well as you can, you're doomed to fail. Structure over strategy. Show up ready to go. Complete your pre-market prep. Be focused. Be in a position where you can trade with precision. Try to be perfect. At least if you try to be perfect and you fall short, you're still pretty good. And then complete your post-market evaluation in an honest fashion. That's critical. We have to look at ourselves in the mirror and say, what am I doing well? What am I doing wrong? Was the last 8 hours of my life worth it or wasn't it? Evaluation's key. It's difficult, but you have to do it. Remember, structure over strategy. In any case, I love making these videos for you guys. Be sure to check us out on the socials. Pound the subscribe button and leave a message below. We'd love to hear from you. Also, feel free to check out a live stream. The new Wall Street Live series is fantastic. Drop in, ask myself some questions, ask analyst Nick Quinn some questions. We'll be more than happy to help you along your journey in trader development. So until next time, trade the action well, and we'll talk soon. See ya.